I'd like to welcome everyone to tonight's presentation. It's a homebuyer workshop. My name is Mark Chappell. I'm a realtor and agent for Coldwell Banker. I've been with Coldwell Banker for a number of years. Also presenting tonight is David Stomp, a farmer's insurance specialist. And then we have Eric Bleth, a senior loan representative with Princeton Capital. Basically, the reason we decided to facilitate or host tonight's workshop is due to the fact that over the years, we found that many individuals, renters, mostly renters, just are shocked to find that they could qualify for a loan, that they could actually own their own home. And also in many cases, probably at least half of the cases, I found that it's actually cheaper. Their payments are less than what they were paying as a renter. So tonight, oh, perfect. Thank you, David. Our agenda for this evening will be for me to, as a realtor, to acquaint you with the real estate buying process, speak briefly about the current trends and availability of the real estate market in Northern Marin, and then David will come up and help you understand homeowners insurance programs. And the benefit with David is a lot of times he can save you lots of money and streamline your present program. And then afterwards, Eric will come up and he's going to speak about various loan options, which include low down payment, what to do if you have low credit, and first-time home buyer programs. And then we'll be covering helping buyers purchase for the first time. So briefly, as a realtor, I just want to take a few moments and go over or simplify the home buying process. My job, I try to make it enjoyable, if not even fun, just and as lighthearted as possible and as stress-free as possible. So we start with a consultation. Obviously, it's free. I wouldn't even consider charging or anything like that, and we discuss your goals. You know, what type of home do you want? About how much do you think you have to spend? Are you pre-qualified? And so on and so forth. And what's your budget? And then I try to work within your framework or within the client's framework. For example, based on what you tell me, I'm happy to email you various properties that meet your criteria, meet your specifications. If you want, I'll actually go preview them first. Or if you say, look, I'm used to this one certain website, I find homes, I'll let you know what I'm interested in. That's fine also. And then in a nutshell, we go and visit the ones you like. And you know, hopefully we'll find your dream home. And all the while at the same time, you are, you know, the client is either pre-approved with a lender, or you'll be working with Eric to obtain pre-approval. And when you find your dream home, I am going to do my best to negotiate the lowest possible price for you, depending on the situation. Sometimes it's a little competitive and there's multiple offers, and it's even that being the case, I'll still do my best to get it for the lowest possible price. When you find the dream home, we'll write an offer and I'll submit it. Now with the offer, we submit the pre-approval letter that you've obtained from a lender. Hopefully Eric, he's very good at what he does. Because you're not taken seriously. Basically the pre-approval letter tells the sellers through their agent that this person is qualified to buy this home. They're financially sound, or based on everything that's seen at this point in time, they appear to be financially sound. And then, hopefully, knock on wood, for the sake of this lecture, we'll presume or assume that the offer is accepted, and then a little bit of work starts. I try to make it as enjoyable as possible, but we read through the disclosures. If it's a condo, there's HOA docs. We want to make sure that the homeowners association, that they're well funded for the next 30 years or so, that they're solvent, that they have the money to take care of various maintenance items that come up, and we also want to order home inspections, like a pest inspection, a home inspection. I like to use a company that also includes a free roof inspection, but a lot of times if it's a condo, most times the HOA includes the roof repairs as part of the HOA fees. And then Eric, our lender, or through the lender, will also order an appraisal. Because besides making sure that the lender can loan on the home, you want to know that it's actually worth what you've offered on. So it serves a twofold purpose. And if it doesn't come in, then that's all the more reason to ask for an additional price reduction. And then same with inspections. If something shows up, usually there's almost always something in the pest inspection. I've never seen something come back with needing less than $500 of work. And if it's Section 1, those are items that need to be attended to immediately. It's common to ask the seller for a price reduction through the seller's agent. Or ask the seller to at least clear the Section 1 items, or reimburse the cost of the Section 1 items through a price reduction or a credit. And then basically, as the process goes on, we start removing contingencies. When we've worked out the inspections and what the seller will do to assist with any items that come up, and when we have the go sign from the lender, we remove the loan contingency. And before that, we will have had an appraisal, and assuming that comes in at value, then we can remove the appraisal contingency till all the contingencies are removed. And then about that time, or after contingency removal, you basically meet with, probably usually at an escrow company, it's a signing of the documents, the loan documents. And I'm happy to be there with you. A lot of times the lender is also. And you sign them, and usually the deal can close a couple of days after that. But before it closes, we like to do a final walkthrough to make sure that it's exactly the way you left it or the last time you saw it. We want to make sure there's no surprises, like holes in the wall, or I've never seen anything like that. Everything's pretty much always gone smoothly, but still it's a last final walkthrough to make sure it's materially the same. The standard is broom swept clean. They can't really expect everything to be spotless, but I find most times the sellers are conscientious and everything is beyond broom swept clean, and that's kind of nice in this area. And then the home's yours, and you are the happy homeowner. Market summary. I will try to be succinct. Right now, that this is September of 2017. Inventory has been low, but it's increasing. After Labor Day, a number of condos and homes have recently come on the market, and it's picking up in that regard. Also, I was told today that a local economist believes that this present market, housing market, will be good through 2020. There aren't expected to be any dips based on the present knowledge. If something could happen tomorrow, but right now the outlook is very good for the next, till 2020. What's that, 3 years or so? Let's see, could you back up, Eric, please? Thanks. Oh, and then market summary. The only thing, I'll be brief, the only thing I wanted to point out is month to month in the last year, from August 2016 to August 2017, the median selling price has gone up almost 9%. Now, to me, and the trend has been up for a number of years now, so that's one reason to do it now. As a realtor, I'm happy to work with you or my clients on their time frame versus my own, but again, I believe Eric can probably tell you better when he speaks, but the interest rates may go up in the near term a little bit, but I'll leave that for him. He's the expert. But in any event, the trend is up with regards to the home prices. Thank you. Next slide, thanks. So these are the top 5 reasons to own. Basically, mortgage payments can be fixed while rents go up. You know, how many of you, every year the landlord, you know, you dread, like I rented when we first moved here, and the landlord, I got a mail, it was Christmas time. I thought it would be a Christmas card, and it's a letter saying, I'm raising your rent. I mean, it kind of ruined my day, to be honest with you. I mean, it wasn't a lot, but anyway, you don't have to worry about that when you own. Your payments are fixed, assuming you have a fixed mortgage. Then also, equity in your home can be a financial resource later. As the home appreciates in value, that equity, should you have an emergency or want to start a business, not that I'd advise that with the equity in your home, but you can take it out later, and that's one advantage. You can also build wealth without paying capital gains. Capital gains aren't due until you sell the house. If you do a 1031 exchange a like property for a like property, I'd say please speak to your tax, representative or tax person for that, but you can also actually move on to another house without always paying capital gains. A mortgage can also act as a forced savings account, because when you rent, basically your rent payment it disappears. It's going nowhere. I won't say what I'm thinking about where it's going. It's being flushed somewhere, but I shouldn't say that. But it's a forced savings account. You're accumulating it, and it's there for you in terms of increased equity. Overall, homeowners, statistically, they can and they do statistically enjoy a greater wealth growth than renters. And I'd say next slide. Oh, okay. And then, well, I could say it now, this is kind of more appropriate towards the end, but many individuals are surprised to find that home ownership is much, much easier than they believe. I find it also affords one much more greater freedoms, and people are pleasantly surprised to find that they may qualify for a lot more than they thought they would, and even with bad credit or possibly bad credit or a lower down payment, one can get in a home. And also, Eric will be up, and he'll speak about the numerous financial options that are available to meet your needs. And my next guest our next speaker is David Stomp. And I must say, the first time I met him in 2011 with my first deal. I had a person that bought a condo, and they had been researching it. We had been researching, and we thought they were going to have to pay $100 and some a month. And I introduced my client, the buyer, to David, and he just said, look, condo, walls in. I think instantly he said that's like $40 a month or $50. It was some low fee, but I was impressed. All I can say, I was impressed with David. Anyway, David Stomp, an insurance specialist with Farmers, is going to come up and talk to you about what he can do for you. Thank you.
Thank you, Mark. My name's David Stomp. I'm a Farmers insurance agent here in town. I've been a licensed insurance agent since 1999. I've started my Farmers insurance agency in 2006, so it's been 11 years now. Other things about me, I'm also a Rotarian, so I've spent a lot of volunteer time here in town supporting some local projects. And what else? I appreciate you supporting me so I can go on supporting the local community. I've networked with these guys in the realtor industry for some time now, and I know the process and how important it is to have insurance there at the right point in time so the transaction goes through without any difficulties. And the thing I would say about that is once you have a home that you have an offer in on, you want to make sure you let your insurance agent know as soon as possible so they can get a quote and make sure it's something they can quote. There's some places in California where it's difficult to get coverage nowadays. We've had wildfires, and after wildfires, well, we find about 60% of the people are underinsured, but there's been wildfires, and that's been a lot of losses on the insurance industry side. So they've had to tighten up their underwriting on those. Farmers took a close look where they were taking their biggest losses on the top of steep hillsides and such with 1.5 lane or single lane roads. It makes it difficult to get fire protection up there, so we don't write in some of those places. My agreement with farmers will let me go outside and get coverage outside. So we can do that, but it's a longer process. So if I can't go to my primary markets, or whoever you're using for insurance can't go to his primary markets, it might be a longer process. You might not be able to do the deal if you can't get insurance. Part of what I do in working with people is helping them build and protect their wealth. I frequently talk to people who are always shopping for auto insurance, because you have to have auto insurance to be able to drive your car, keep it registered. And the insurance they require you to get on auto insurance is liability. So if you crash your car into somebody and you cause damage to them or their property, you have to be responsible. So they require you to have up to $15,000 of coverage on your auto policy for hitting a person. That can go pretty quick. So if you have those limits, I recommend you taking a look at increasing them. It doesn't cost that much to increase it. And the more you increase your limits of liability, it's more and more affordable. So the most expensive portions are at the bottom. As you get higher and higher, it's more and more affordable, because you have to go through the lower part first before you get to the upper parts. So what we're doing here is talking about liability, and something you might be familiar with your auto insurance. I'm always talking to people about having a renter's policy if you're not a homeowner, because it rounds out your coverage. Some people say, I don't care about my old stuff, my furniture and things. That's fine, but an important thing for you to know is that there's liability on a renter's policy. So here we've got two different proposals, 1 and 2. This quote has $100,000 of liability insurance. So if you have a kitchen fire, that's your damage. And if you don't have a renter's policy to help you pay for it, then you're gonna have to pay for it out of your own pocket. The landlord may have an insurance policy that will make the landlord correct, but the insurance company, and it's not farmers, it's any insurance company, has the right to get their money back from the person who did the damage. So just like if you rear-end a car with your car, the liability insurance you have is gonna pay for the damage up to its limits. If you have a renter's policy, you're gonna be able to pay for those damages up to your limits. This quote has $100,000 of liability coverage. This one has $300,000 plus some additional features I've thrown in there. And the premium is only, $21 more for all this. You get $200,000 more liability coverage. So if you were to burn down a house that you're renting, you might be able to rebuild it with that. You might not with that. Hopefully it's a smaller loss. Other things that I've seen affect renters are bathtubs overflowing or some sort of water spill. Frequently it's something on the stove, boils over, catches fire, things like that. So for less than $200 a year, you can have, $300,000 of liability coverage, proper coverage for your computers and things of that nature. $25 a year, you're getting identity fraud to help you protect you from the frequent security breaches we're finding at lending institutions and wherever. So this is my recommendation. Now, if you have this with the same company that you have your auto insurance with, you're gonna get a discount on this policy and also your auto insurance. So this premium on the lower end, we're looking at $142 for a year. Actually, $12 of this is a one-time fee with farmers to start a policy, so it's actually $130 a year. If this gave you a discount on your auto policies, you had 2 cars and it's saving you $60 a year on your car, this is becoming free and it's rounding out your coverages. So you might not care about your old stuff, that's fine. Let's look at protecting your future so you can afford a home. So that's my recommendation to you is if you don't have a renter's policy, consider one. Give me a call, I'd be happy to advise you. And you can't go shopping for a house unless you're qualified for a loan, so we'll let Eric Bleth give us more information on that. Thank you.
Hi, my name is Eric Bleth with Princeton Capital. I'm the in-house lender for Coldwell Banker. I've been in the business for approximately 20 years, working with great real estate agents like Mark Chappell and insurance agents like Mark Stump. So today we're going to talk a little bit about the home buying process on the loan side when it comes to affording a mortgage, how to get pre-approved for a home purchase, and talk a little bit about the available loan programs and the advantages of purchasing a home today. If we can go to the next slide. Here's what we're going to talk about is basically share the possibility of home ownership, who we are as a Princeton Capital and what we do. We also look at the opportunity of buying versus renting. Many of you are out there renting today, and this is an opportunity for you to step into homeownership. The possibility of tax advantages, as well as the loan payment, talk a little bit about the mortgage, home insurance, types of mortgages, the loan process, and then finding a home of your dreams. That we're also going to talk about is home buying and the advantages of home buying versus renting. One of the key things, and some of the things that Mark talked about earlier in this presentation, was the tax advantages. You do certainly have a tax advantage today. The mortgage interest rate and property taxes are tax deductible. The second point here is property investment and equity becomes more of a valuable over time. Mark indicated some good appreciation, year-over-year appreciation in Marin County. Third point here is the control of your improvements to your property. If you ever wanted to knock down a wall, if you ever wanted to paint, some landlords won't even allow that. If you wanted to own a pet, sometimes the landlords won't allow that as well. So you have the ability to do that with your own home. And then really nicely, pride of ownership. Somebody that takes care of their home, and it really is one of the best investments that we see today. Renting, there's no deduction on the other side of the coin. There's no deductions, no equity earned, cannot make any improvements to the property, limited on that aspect of things. And some, like I mentioned earlier, in some rentals, the landlords won't even allow pets. So tax advantages, this is probably one of the most important part of owning a home is if the current rent is, in this example, is $1,500 a month, there's no deductions at all available when you rent. You're giving that money to the landlord's making the mortgage payment. If we look at the example of owning a home today and your mortgage was $2,500 a month, the deductible amount is $2,300 a month, assuming the amount of interest and property taxes are taken in there for deduction. If you're using a 28% tax rate, the tax savings is $644, bringing the net cost to buy at $1,856. That's a difference of about $300 there, $356 between what you're renting and what you actually are buying. And today, there's a lot of statistics on the rents and how they're increasing year over year, and even month to month, if you're on a month-to-month rent. The types of loans that are available today are 30-year fixed loans, 15-year, and 10-year. There's also adjustable rate mortgages, also called ARMs. The ARMs can be fixed for a fixed period of time for 10, 7, 5, and 3. There's no negative amortization loans out there today. That was done away with in 2009 with Dodd-Frank. And then we also do government loans, which are FHA, VA, and a USDA types of loans. Those are the conventional types. We're also looking at, in the types of loans, 30-year fixed, as I mentioned, and a 15-year option is available. Those are fixed rate loans. The payment never changes. It's consistent. If the rate was 4% at the beginning of the loan, on a 30-year loan, it would be consistently 4% through the entire process at the end of the 30-year. It's a very conservative approach. I'd say a good percentage of people today do a fixed rate loan over the adjustable rate mortgages. The rates are typically a little bit higher than the adjustable rate mortgages, but they're very comparable today to an adjustable rate mortgage. Qualifying for smaller dollar amounts, you're looking at 30 versus, this comments in regards to a 30 versus a 15-year. You're actually, the mortgage payment is going to be lower on a 30-year because it's amortized over 30 years versus a 15-year, where it's amortized only 15 years, a larger payment on a 15. So we also do FHA. It is a government loan. Federal Housing Authority is what FHA stands for. As low as 3.5% down, 100% gift is allowed. No cash reserves are also a big part of that. No cash reserves mean that you don't have to have anything over and above what your down and your closing costs are. The minimum FICO score is 620. You can actually do non-occupied co-buyer. Say you had a relative, like an aunt and uncle or a parent, or even a brother or sister that wasn't living in the home and wanted to help you purchase the home. They could actually co-sign for the mortgage and what they call non-occupied co-buyer. Okay, like if this is basically another way of saying 3.5% down, 96% loan to value. The nice thing about FHA, if there was declining markets, which we're not seeing very much right now, there is flexibility with FHA. Let's go forward here. VA loan, we also do a VA loan. One of the key pieces about this loan is that it's 100% financing is available for VA. You certainly have to be coming from the military, either a reservist or an active or inactive military personnel. Okay, there's no mortgage insurance, which is great, even if it at 100% financing. Okay, let's go on with that. We also do USDA loans. This is in specific markets of the country where there's 100% financing with no mortgage insurance. Okay. The important to note is that there are certain types of properties, single-family residence, duplexes, condos, townhomes, and these types of properties are important, and they do have an impact to the loan. As an example, single-family home versus a condo, there may be a rate differential between a single-family home of 30-year fixed and a single-family and a condo versus 30-year fixed. So it could be a little bit higher on a condo typically. Let's go on to the next. This is a wheel that gives us an understanding of the loan process. 7 steps. The pre-approval, which is a great step to do no matter what you're doing. You get a good understanding of what your maximum pre-approval amount. There, we do our free pre-approval, and it takes less than 30 to 40 minutes to complete. And it's a great step. It's a no-cost step once again. Number 2 is you work with a real estate agent like Mark to find the home, search out the home. Number 3 is to complete the loan application. 4 is that we send it to processing to take care of the loan and send it off to the 5th step, which is underwriting. 6, we close the loan, and then 7 is move-in day and get your keys. The loan process and qualifying, this is something that the underwriter reviews and making sure that you have the ability to repay the loan, the willingness to repay the loan. That means that you have good credit history, and one of the steps that we do is we do look at your credit report, give you an understanding of what your credit scores are, give you an understanding of what your liabilities are. It's an important process. The other part of this is the collateral. We will order an appraisal like Mark mentioned earlier in this presentation. The appraisal is done at the first part of the steps of the transaction, and as the consumer and the buyer, you will receive a copy of the appraisal report. Okay. One of the advantages of working with Princeton Capital is that we do more than just a pre-approval. We do an advance review, which is a great step. It's not just a review of the pre-approval, which I do. The advance review is an additional step, and that's taking the file to a senior underwriter. We review it. We look at all the income and asset documentation that you would provide, and we have a live underwriter fully approve the loan, which means that that creates a smoother process in this whole transaction. Once you have the advance review approval completed, we can actually get the loan closed within 25 days. That means with a purchase contract, an appraisal, and a preliminary title report, we can close the loan within that 25-day period of time. So finding the home of your dreams, this is a very important part of the process and having dream of home ownership. Working with Mark and a team to look for a home is important, and the fun thing about it is that there's a lot of available homes that are out there today in different price ranges. For example, in Marin County, we were looking at homes today that were in the price ranges of between $300,000 to $600,000 today, and that translates into, in most cases, some cases, actually a lower monthly payment with taxes and insurance included, and sometimes the HOA, lower than what you're currently paying in rent. So why would you want to work with Princeton Capital and Coldwell Banker as a team? Princeton Capital specializes in purchase transactions. We've been working with Coldwell Banker for over 25 years as a joint venture. Unlike the banks, we really focus on one product, and that's home loans. We don't do checking accounts. We don't do auto loans. We work on a focused attention to with your real estate agent to close the loan on time and making the deadlines that you need to do through the transaction. Thank you for your time today. I look forward to working with you on your new home purchase. What I'd like to do now is introduce Mark Chappell to come back and wrap this up for us today.
Thank you for attending tonight's Home Buyers Workshop. In summary, I'd like to say that many of our clients are pleasantly surprised to find how seamless, how easy, if not enjoyable, this whole process is. Now, as Eric said, there are numerous financial options available to meet almost any financial situation. And then with regards to David, you now have a friend in the insurance business. So I'd like to say, get started today and schedule a consultation. But you, our client, are always in the driver's seat. It's up to you to reach out to us and take this first step to move forward.